Thank you so much and welcome to the KYC Reverification Mastery. Today is really about cost-effective strategies and operational excellence. For those that don't know me, my name's Kim. I've been working here at GBG for the last 4 years. Over the last 10 years, I've been helping customers with their financial services and programs of work to create process efficiencies and solution automation. My experience originates from commercial loan decisioning and extends to consumer comprehensive reporting. This has given me a breadth and depth of knowledge to be able to support customers in their anti-money laundering obligations and ultimate beneficial ownership requirements. So today, really, we're about knowing about the process for Know Your Customer, KYC re-verification. It's a crucial part of your regulatory compliance and risk management for financial institutions. However, initiating and executing a program like this can be particularly hard in large organizations. So, really, today we're talking about unpacking key items like how do we simplify the verification process, maximize successfully verified customers with the limited disruption and impact to your customers. We're also going to talk about ensuring compliance and all applicable laws and obligations, and I guess the big question is, how do we do it with a lower cost base? So what we're going to do is we're going to cover a structure of three main questions today. Where do I start? What does a good program look like? And how are others doing this? So today I was supported by a GBG and Intellect Consulting joint webinar. I'm supported by Southby, whom I know very, very well, who is a solutions consultant here at GBG. He has a vast array of knowledge with fraud identity for the last 2 decades. And together we've been helping organizations help combat fraud, meet compliance, and improve the customer experience for online verification. I also have the pleasure of introducing Ronald Dahlia. Ronald Dahlia is a consultant that is who talks about risk, regulation, and compliance, a specialist over transforming programs for financial crimes and programs of work. So, having said that, I'd love to kick off our first conversation to say, hey, Ronald, when we talk about verification with your clients, what does the terminology you look like when interchangeably talking about verification, refresh, and remediation? Would you better clarify those terms for us, please?
Sure. And thank you everybody for having me today. So this comes out quite a lot in a lot of these conversations, and always going back to those 3 points you made. What does good look like? What's everybody else doing? Where do I start? Where do I start when it comes to these things is actually quite a challenge. So the three, in answer to your question, most programs should have an element of KYC refresh in there. That is, matching up with your ongoing customer due diligence requirements to keep your understanding up to date of your customer. And that is the KYC details that you have on file. I use KYC and customer due diligence interchangeably in this, and they vary from place to place. So refresh is really around keeping that up to date. And what we've found over time is the refresh used to be very much static on a sort of high, medium, low basis of refreshing it over particular periods, now becoming much more trigger-based when it comes to the medium and low-risk customers. On the re-verification element, that's really all like, we're then taking your refresh activity, making sure that what you've collected is actually verified as well. Very much similar to the onboarding process. A lot of companies struggle with that view because they feel, oh, I have to go then back to the customer and collect all this information. And how am I going to do that without disruption? Is that going to be a large process? Is it going to be difficult and so forth? So that's a real challenge. And I think solutioning nowadays we'll sort of see will actually help. And we'll talk about some of those things later. The third one is remediation, very much in the sense that use that terminology sparingly on the basis that you have an admission that you need to uplift to a point. Could it be because regulators tapped you on the shoulder, something's broken, something's missing? Remediation is to remediate something that is maybe below expectation, below par, below below a regulatory requirement. So on that front, it's very different when you sort of talk about a program of remediation versus a program of refresh or re-verification. And on those bases, I think that my takeaway view is you see projects or activities typically attributed to the remediation effort. We know, we see, and I help a lot of our clients out on that front. And on a bulk view of a backlog to say, hey, we haven't done as much as we'd like to, or we haven't had the tools or the process in place. So you have a backlog or a book of customers you want to sort of catch up and work through.
Excellent. Thank you. Mark, I guess we've worked on a lot of customer re-verification projects. Probably be good if you could cover just a bit about the regulation under the AML/CTF Act and what this means for financial institutions and what do they need to do and why.
Thank you, Kim, and thank you, everybody. It's an interesting question because you do end up looking at the Act, and then there are also guidelines, and I want to bring it back or not bring it back, go down a little bit in that we're talking about re-verification, but you also have verification. So there's potentially a starting point, and coming to what we know quite well and very well is it's about data sources. So when you're verifying a customer, you want to do it electronically. It comes back to data sources. And we have this, if you look at the Act, it talks about 2 independent and reliable data sources, and then it gets vague. And you look at it and it says how you must consider whether this data source was a government data source. And what we have seen, so going back to the question both of you have talked about, what's everyone else doing? And what we see is that from a verification perspective, many take 2 data sources as meaning a background. Some people call that non-consent. That's not true. It's a background, and we can talk about that a little bit later, and 1 government ID. And then we have other customers who talk about 2 government IDs. So forgive me for getting a little bit into the weeds here, but that's what it comes back to. I want to verify myself electronically. And then we need to move from verification to re-verification, talking about all those things Ronald did. What does that mean? Do I have to do exactly the same when I re-verify or verify, or can I do something slightly different? And that's where, coming back to what do we see our customers doing, is when it gets to re-verification, many of them say 2 independent and reliable data sources, but they can be background sources. And then if you can't match on those, we then move to government IDs. So there's no clear answer here. And of course, your compliance officer has to be comfortable with it. But it comes back to data sources. Which ones do you trust? Which ones do you think you're allowed to use? Which ones do you feel make yourself compliant?
Excellent. Thank you. And given all the details that you've provided, Ronald, why would you advise a customer? Where would they start with this? It seems like it's a big, complex beast. Like, how do we make this simple for the people that are listening to this to break it down, break it into nice, manageable chunks where it's nice and easy to consume and produce?
Yeah, look, it's probably in this thread of conversation, it's the number one thing I'm asked about. Where do I start? I think the real challenge for a lot of companies is coming along and saying, when you pitch it to management as an idea, it's generally sold as this huge program of work which goes on for years and years, and nobody really understands what tracking is going through there. Targets move, data changes. It's really hard to keep KYC staff and rotate them through and other things like this. All becomes a real challenge. So starting position, the way we've sort of attempted this in the past, and it's worked quite successfully, in that you basically, you start with some analysis. So all this is going to feed into some sort of proposition or business case that you need to pitch internally. And the key to this is to quantify and qualify what are the points we want to work through, and how are we going to break this up into chunks, into bite size, that our leadership can actually manage through, and manage through and understand what does that actually mean. So what that means is, as an example, if you look through your customer book, the natural thing you sort of gravitate towards is high, medium, low. Do I gravitate towards that? Great. What if you've got customers that are transacting every day and you have little or no address information on them? So that's a great example of sort of saying, right, I have a big picture view of all our customers, but within that, I'm now starting to segment, and that's a very sort of, it's a buzzwordy sort of term, but if you can carve your customer book up into segments of areas that need attention. So you look at this cumulatively and sort of say, how many of these customers have got faults on their KYC? Can I actually get one of our data analysts or IT people to sort of write a report that gives us all of these things that I can put into a spreadsheet, and then say within that, what are the ones that feel like they've got the greatest level of risk around them? Like I said mentioned before, transacting often. Maybe you might add high risk onto that to actually even sharpen that even further. Maybe you've got 5 KYC issues with that particular cohort of customers. Then you end up with chunks. And you end up with these chunks of actual achievable work. You can start put them into order, priority. Now you have a basis of a really good business case to sort of say, hey, I have a really compelling view on what we need to do and how we take this forward. But in cycle time, you would go initially, hey, we have some issues in this. It's anecdotal and so forth. I need analysis time commissioned to work through. You then quantify, prioritize, need to run that by any stakeholders or any of those other people that you might have an influence or bearing on that. Now you've got a great basis and a business case to actually start. And from there, you've got the analysis can also help you with the solutioning and working out how you actually might want to solve that.
Excellent. Ronald, you mentioned definitions of high, medium, and low. I mean, that's a question that we get asked as consultants very often. How do we define high, medium, and low? Would you be able to give some context or support those definitions with
Yeah.
organizations?
Look, I think so. The AML CTF, so all the acts, rules, compliance, guidance, all is wonderful. Regulation all talks about risk-based framework. So risk-based framework, most companies, reporting entities have some sort of risk rating regime that does high, medium, low. In the context of this conversation, that's useful, but does it help you? The question I would ask is, does it help you achieve what are the targets you need? Doesn't automatically, and I've seen this happen plenty of times, does it automatically mean all your high-risk customers are going to basically fall to the top of the pile? If you're following some sort of enhanced customer due diligence process already, it is highly likely those customers are basically being subject to a, hopefully an annual sort of refresh of some sort anyway, because they're part of the enhanced due diligence program on the back of that. But broadly speaking, the high, medium, low definitions are there to help you with that segment approach that I talked about. But really, I think not to overrule what's in there, because it's a useful dimension to help you with your prioritization. But in the context of this conversation, there's some things you need to sort of think above and beyond that to actually help you work out what the priorities are for your re-verification, remediation, refresh, if you need to do that on a project basis.
Thank you. And I think from a project basis, we do see the existing way that a customer would manage that list after segmentation is that they would give that to they give that list to a customer support team and say to these individuals, if you have contact information, why don't you give them to those individuals? We all know that this process can be resource heavy, very costly, time consuming. And it's even if you can even get the customer on the call, get them interacting with you because you possibly or potentially don't have a relationship with them. So I guess one of the key objectives that we're talking about re-verification really is to how do we minimize outreach to individuals? So off that mark, I'd love to hear from you. How do we support customers with this and what does good look like?
Thanks, Kim. And as I've been trying to say, this is not what the Act says, this is not what GBG says, this is what we see our customers doing for re-verification. As I mentioned, we have this concept of background data sources trying to match. And I would point out here that Again, what our customers do for low and medium risk customers, that is sufficient, running against background sources. If you get a match, you're re-verified. But then, and it could be medium, it could be definitely high risk, you might need to outreach. So I just want to put that caveat around it. It does depend on potentially on how you rate the customer from a risk perspective. But what we typically see is running the book or the segment, whatever you're doing against those background sources. Ideally, you've got 50, 60, 70%. We can talk about that at another time, but they're matched. So we now have this concept of customers who either haven't matched on background sources or they're high risk, and we need to see a government ID. We need them to verify electronically a government ID. Now, if you went back even 2 years ago, you'd send the customer a text, say, click this link, go there, off to this nice website, verify your ID. So we now know that, one, you're probably not allowed to send a text anymore. And if you do, it's very likely to be ignored. So how do you tell the customer they have to do something that they didn't know they were going to have to do, coming from an organisation and can be trusted? The one thing we say is you can't have a single approach. The one thing we see. So if you just send an email, it'll be ignored. It might have ended up in junk mail anyway. So you need to almost, bombard's a bit of a strong term, but you need to go out to different channels. So you might send the customer a letter, send them an email, and then in a perfect world, what you would do is direct them to your app or your website to say, no surprises, go in there. We know you're not going to trust this. We know you've got to trust, but if you go in there, you will see what we have to do for you. We're asking for verification. And so when the customer logs into something, they might have used 2FA to get in, they now feel reasonably secure. And there's a much better chance that what they will do there is follow the guidance from you. So they'll click a link, which will take them off to perhaps another page, ideally still with the customer, the organisation's brand, so that that trust just keeps flowing along, and then they verify. But even then, and I mention a funnel many times, so you'll have the funnel, you've got those background, you come down here to the ones who need to verify with a government ID, you go out the first time, you get a little bit of interaction, the funnel gets a little bit smaller, you perhaps go out again, and then there's this, typically we see the third time where you have to start getting a little bit nasty and say, we're going to block you or limit you in some way. You know, we've asked you very nicely, this is real, we need you to do this, and then you have to actually take action, or depending on the nature of your organisation, at the bottom of the funnel is potentially where you have to pick up the phone and then talk the customer through it, which is a little bit of a challenge in itself, because who answers calls these days if they're not in your contacts? But you are working down like this, and so it does become manageable there. But the idea there, to Kim and Ronald's point, is that you're moving along, you've gone through your segments, you're just getting to that point where you're managing, and you now have a very small segment rather than what you started with, and the majority of it happened automatically.
Thanks, Mark. I've heard you mention the word background sources quite often, and I'm aware that it could be potentially a GBG thing. It could be potentially something that we use within our conversations, but I'd love you to be able to unpack, if someone doesn't know what a background source is, how would you define it and what is it?
And thank you for raising that, Kim, because it is terminology we use a lot. So we are talking about electronic identity verification, which means part of the act is you're matching against a data source. So you've got the customer details, name, address, date of birth, and you're matching those against an electronic data source or a record of some description. To give you some examples, you'd have ASIC directors. So if you're a director, you're at ASIC, the Australian Insurance Claims Database, the Australian Tenancy File. So they are all data sources or background data sources that have been deemed independent and reliable, not by us, by our customers who've said, yes, we're comfortable with that. We might produce a statement to say why we think it's independent and reliable, but the customers always need to say, yes, we're comfortable with that. And that is part of the re-verification project. If you're going through this and you're automating that, your compliance team needs to be comfortable with those sources. And then what you do is take that customer data, run it against there, and do you get a match? The one thing I would talk about, if I could, on the consent. So quite often we get the question, how do I get the customer's consent? Well, that is why we use the term background, because if you have consent previously, you don't need to ask for the customer as part of an interaction. So what that would mean is, if you're going down the path of a re-verification project, you need to be comfortable with the terms and conditions that the customer may have signed up to years ago. Now, in most cases, it will be okay, because to verify them in the first place, there are terms and conditions. And what we're talking about here is re-verification. So it should be that the T's and C's follow on, but they need to be reviewed. You need to be comfortable with that. Am I okay to, in the background, run my customers' data against these sources?
So would it be right in assuming that I have, for all the financial institutions that we do work with, I have an individual, I've opened a bank account, a trading account, a payment account with you at some time. You've onboarded me as an individual, so you electronically verified me at that time. And then there is another point in time that you need to confirm who I am. So is that fair to say that's the definition, or that's our understanding of a re-verification project?
I think that's a fair point, but the challenge is the further back you go, and are you comfortable? Do you have an absolute record that the customer was verified in the terms you just mentioned, Kim, back then? So you need to be comfortable, and if you're not, then in a strange way, your re-verification might actually be a verification, if you know what I mean. It can get very blurry. And we also have this tension at the moment. So I know I keep getting a little bit deeper, but it comes back to a government ID at some point. And we have this whole, why on earth are organisations storing our government ID? But then on the other hand, sometimes as organisations, we're asking for the customer ID. So we have this tension where the government's telling me I need to see your ID, and then over here I'm in trouble because I'm storing your ID. So sorry, that's a very long-winded way of saying you really need to look, do you have a valid record where you could put your hand on your heart and say the customer was verified electronically as per the Act back then? If not, there's potentially they need to be re-verified.
Mark, just to add on the back of that, also, have you actually, from a record keeping perspective, kept what the outcome of that verification was as well? And that's a different case altogether. That's actually quite a hard one to dig up and demonstrate.
And how long do you save those records for, and where are they stored? I think is also a view that needs to be a consideration. I guess, Ronald, I'd love to hear from you. Based on what Mark has just said, he's touched on multiple stakeholders. He's touched on information security. Where are you storing that information? He's touched on PII. He's touched on compliance. How does a project team look at managing or stakeholder management through this project where multiple stakeholders touch this? What would you recommend?
Okay. So it's a good question, because if you undercook it, you find yourself in a position where you're up against customer experience, you're up against marketing team, you're up against a particular, retail banking, service delivery, you're up against operations. The idea here is to go, and it shouldn't scare you to start out. Who are the people you're interacting with? Who are the people that are likely to be impacted? This is very much about change management. I'm not sort of stating anything revelationary or new or any of that, but you have to consider who are the people impacted and how you're going to engage them internally. The larger the business, larger the reporting entity, the more complexity they might have, and the different stakeholders you have. You do need to drive it via a project type of approach if you're doing this en masse. And on that basis, they need to be comfortable that, you know, you're not, what's the requirement? How are they going to help you? What are they going to assist with? The cyber element on this is a classic one that sort of comes up all the time. You know, as soon as you start talking about shipping data across over the fence and so forth, people get nervous. But, you know, what I've found is progressively the companies that are receiving that data on the other side are really well set up. They're comfortable. They have gone through a process already of demonstrating and showing that, you know, how they're going to hold the data, how they're going to receipt the data. And that's quite well understood. But you should not, you should be considering what's the change impact going to be internally, and who are the stakeholders you need, because, you know, that list can grow and doesn't need to be complex. I think nowadays a lot of people are very up on risk and understand the relevance and the driving factor there. It's just making sure that these people are engaged as early as possible. And when you're doing that, when you're working through those points that I mentioned earlier, which is around, you know, quantifying, analyzing, at that analysis stage, work out who your stakeholders are, get them involved, tell them what you're doing, tell them what the end game is, and see what sort of approaches that come out of it. Just to build on Mark's point as a final comment there, the traditional approach of, you know, gosh, we're going to reach out to 1,000 people, you know, we're only going to get 5% return on that in terms of what feedback is. You know, that's changing. That's changed and is changing and has changed as an approach. It's still tricky, but, you know, there's lots of ways and means to do that. And when you talk to, like, you know, if you took to the call center, for instance, who might traditionally be given a campaign of, here's a set of data, reach out to these particular customers, that approach, you know, may not always be relevant. You know, some ideas being talked about here about how you might automate some of those things as well. So they are really worth considering what's available and how you can actually make that process easier. But doesn't take away from your change management view, you know, but don't overcook it.
I think you
If
mentioned some good points, quantify and qualify. Like, I think in every project that anybody has done in their experience, your transformation, your change management, how do you measure success? I think that's really a key thing. So I think from Mark's your from our experience, how does a customer measure success?
could I just add one thing,
Oh, sorry,
because
you go for it.
no, I just because Ronald made me think, and what we're talking about here is typically this, you know, we're all talking about, we've got this big project and how do we attack it? Where do we start and do that? But the one thing we should all be aware of is that you don't just do it once. Like, it is re-verification, but because the whole sort of environment has changed, we tend to work with customers on this big bang. We've got this problem. We need to solve this problem. But these customers, depending on their risk rating or how you classify them, do need to be re-verified again, and potentially again, and potentially again. So yes, we need to get, how can I say, AUSTRAC off our back potentially, but we also need to consider, how do we make it almost become business as usual next year and the year after? So to your question, Kim, what does success look like? Well, we need to get these people fixed up, but then we need to, you know, make sure it's not such a huge task next year. So we do work with a couple of customers who are set up for that, and it just rolls through. I will be very clear, the majority aren't like that. It is, we have a problem, we need to fix it. But we do have customers who say, okay, on this date, or they flatten out the work and it just becomes part of their business, that when on this date, this customer with this rating, we start rolling it through. But so yes, you've got to get the big problem fixed, but please think about the future.
Yeah.
And I think that's what we talk about, is ongoing program of work. It doesn't have a stop date, but it definitely has a start one, I think is a good view,
that's
right?
a good point.
Yeah, that's right. So I think your success answer is exactly that. I think, look, as you go through the process of, I'm going to call it the back book, you got to work through this back book, get it cleared, And the idea is you should measure and report as you go through. The measure of success for these sort of activities is really demonstrating, almost like a sort of burn down chart. I've got these segments I'm working through. When you're expecting to finish them, we're going to finish that one in 3 weeks' time. We expect to finish that one next. After those, we solve for this, this, and this. If you've got a book of work to work through, that type works. And I've seen that work really well. In actually setting that process up and going through that, you are effectively designing your, a BAU process in that regard as well. So then, out of the back of this, you set up a BAU function that will actually operate this stuff on. You can level it out over the year, as Mark mentioned, but the success view on this is once you set up those reports, those inquiries, those SQL queries and so forth that you might run in the background or otherwise, you want to repeat those on a regular basis as you're going through, so you understand what's changing and what's been fixed. Secondly, you also want to understand what that happens on a regular basis to sort of see, are you getting anything new coming up? This will really help you with any root cause issues as well that you can sort of solve long term. But they only come out when you start to get that sense of what's happening over time. And the reporting, the clarity of how that information has been updated is key. And then the BAU part on the back of that, as Mark mentioned, is where you want to be heading. And, you can take people out of that process in the project and so forth and utilize them in a different capacity on an ongoing basis. Again, don't need to overcook this. When you understand what you have to do and you quantify that, then you have a means to say, I can spread that over 3 years, or I can spread that over 5 years. And then you have a view and sort of say, I know it's going to cost 20 minutes per one, 50 minutes for this one, or otherwise. And you can start to sort of quantify a model that you can say, I can qualify a resource cost or not. That's the sort of way that we unpack it.
Excellent. Mark, I might come back to a question that you were talking through when we talked about outreach. I think if I talk about the process that we've seen customers use, is that we get a segment of a portfolio, we wash that through some data sources. We say that, yep, this individual has been found at 2 independent data sources. But you mentioned outreach. And you said, well, we just put a link in. But just wondering if you could expand a little bit more on what does putting a link in? I know that we've got all these scams and fraudulent, and we've got these warnings from institutions that says, do not click on this. So what can an organization do to combat that challenge when it comes to making them do something?
Thanks for pulling me up on that, Kim, because a link could mean anything. I appreciate that. But again, what we see is at some point, if the customer hasn't been able to be verified on background data sources, they need to interact electronically for their government ID. So hopefully most people on the call have had to verify themselves electronically, but that's essentially a URL. So that's where you click on a link. It might be within your organization's website, but you click on a link, you'd move to another, as seamless as possible. But it is a link. It is a URL. So you click on the URL and you move to somewhere else, and you're now prompted to put in your driver license, passport, etc. So to your point, Kim, that URL, we're sort of all learning now that you don't just click on things and go over somewhere else and just start giving away your personal data. So that's where I come back to. Closed loop is the wrong term, but you want to do it sort of inside, whether it be an app or your website, but where a customer has had to log in. So let's say they go to log in, it says, yeah, that's great. You're saying you're Mark Southby, but we're going to send you, your code or put your fingerprint here. Then once I'm in, I'm comfortable, and I will probably more likely to do what that organisation is asking me. So that link is then not really an external link. It feels like I'm in, and then I'm more likely to do what the organisation's asking me. But the reason I talk about the link is it's like you have this place, but at the end of the day, it's a URL. So trying to keep this really simple. How do I get that to the customer so they feel secure and comfortable to use it? and sort of feeling protected by the organisation.
Excellent, thank you. I think I've covered most of our questions. Have we missed any topics, or I might reach out to Ronald and Mark for some support?
I've got one thing I'd like to point out, because we're talking about segmenting and breaking things up and how do I make it easy so it doesn't become this massive project. One thing we did see with one, and also I would advise there, we see two sort of projects. One where you're working at a medium pace because you don't want to get in trouble with AUSTRAC. And then we see these urgent projects, which means AUSTRAC's already been, right? If I could be so bold. So without anybody saying it, you can feel that. One customer we worked with took a really interesting approach, because they, to Ronald's point, they didn't have the time to plan everything out. That you know, a good project should have a good project plan. So what they did was basically took all the individuals, ran them against the background data sources that I keep talking about. And so they immediately, because it was meeting their compliance requirements, they immediately got 50 to 60% of the problem away. Yes, they were managing it. Yes, they were in control, but then they now knew the size of the problem. So rather than have this very large project plan where we go through this, then we go that, they sort of removed half of the problem very quickly. And then on one way, it sounds not great, but on the other hand, it's great, saying, oh, now what do I do with these customers? But you have a reduced number of customers. So everybody sort of relaxed a little bit because they knew what they had to do. And the other thing we haven't touched on in this whole thing is, what do you do with organisations? So companies, trusts, partnerships, what you have to do when, again, they will have their own risk rating, they will have their own thing at some point. And again, this is not us telling you what to do. This is what our customers do, is they determine the UBO, the ultimate beneficiary, typically at 25%, but that's not written anywhere. And then when you have the individuals who are UBOs, the process we've been talking about for the last 40 minutes, then that needs to apply. So again, if you're trying to work out how do I manage this project, separate your individuals and non-individuals, work through that. But then the interesting thing is at the end, they all meet, because we just have this list of individuals.
I'm going to ask the million-dollar question. When we're talking about entities for ultimate beneficial ownership, how do we deal with trusts? I'm throwing out to both Ronald and Mark, because I know it's a hard question to answer.
You can't automate everything. Is what you go, Ronald.
Yeah, look, yeah, no, I'm hoping a couple of clients actually on this, but broadly speaking, you know, it's if you sort of, I do a number of posts on LinkedIn on a daily basis, and you know, I call the compliance projects are like onions. You know, you've got to peel away each layer as you go through, and the trusts are very much along that line. You know, you peel away a layer, you find out some more. You peel away a layer, you find out some more. You know, and the skeptics automatically say, no matter what you do, end up crying anyway. So, look, I think from the UBO perspective. And trusts, you know, companies, great. You can actually structure data, send it off. Listed businesses, same story. Trusts that are super funds, regulated, again, not as great, but still much better. Then obviously individuals we've covered off. Sole traders, you potentially can get some level of your trust is the sticky one. I think, you know, there are lots of solutions out there at the moment. The RegTech space in Australia is actually great compared on a global basis. Lots of solutions, ecosystems, wide, weird, wonderful, lots of things out there. When you're trying to unpack the trusts, you almost have a two-stage process. You know, who are the people you need to be contacting? Looking at the trust deed. Has the trust deed changed since you've had it last? Highly likely it probably has. If it's a reasonable length of time, it could change tomorrow and you wouldn't know about it. So what are you doing, and how are you managing that on an ongoing basis is a different question. But again, a layer-based approach on that one. If you unpack, you find out people. Have you got more entities within that? Do you need to go further down and connect more trustees or company searches that make up those things? So there's economies of scale on the trust side until we have some sort of open registry around the back of that, which is, going to be forever. It's going to be very difficult to work those ones out. But can you aggregate a whole bunch of individuals from trusts by attempting to, I'd say, remove layers from a whole bunch of them and get an economy of scale and say, right, we are structuring our process. And, Mark, I think even though you may have a terrible plan, it's worth having a plan regardless. I think you don't have to overcook it, as I mentioned. But, your first pass might be, we are going to aggregate 200 or 100 individuals out of the basis of 20 trusts or 30 trusts, and then first pass, work through that second pass, because you've got to resource it. What are you going to do when that data comes back? So it's great that you get a volume view on that, but what are you going to do when it comes back? And you got to resource that. You got to do something with it, and you got to work out what the next steps are. So the trust one is a hard one. Really complex entities are difficult to unravel and do take a bit of iterative work through. But where you can aggregate and consolidate, if that gives you an efficiency or economy scale. Mark, I don't know what your thoughts are on the back of that.
Everything you said makes sense, Ronald. The only thing I would say is just getting down to that detail level. You're still opening a trust. From what I've seen our customers do, you're still opening up a trust. You're looking through the record, and yes, there's some AI and machine learning to say this is probably this person, this is probably this person, this is probably the date, but you've still got a set of eyes on it. And so we're to your point about the trust registry, we're all hoping, waiting for that. But at this point, you can automate almost everything until you get to trusts, and there. So depending on thinking of the organisations on this call, depending on how many trusts you have as part of your re-verification process, project, plan, that's where humans come into it. And if you
and Australians love trusts, you can't sidestep that. Your grocery store down the road is probably underpinned with a family trust. End of story. They are there. Question is, how can you deal with them?
And it's because we don't have a single database that holds trust deeds or any information that is refreshed like ASIC. So we don't have that mechanism in place. So it'll always defer out, regardless of the software, to a manual intervention, because you're going to have to look at things and ask for things just because of the nature of a trust. And the reasons why a trust is set up is to protect assets. So I guess that's one of the reasons where, when you're looking at ultimate beneficial ownership, that you do really have to cast eyes over it, go through a manual process, understand the differences. And it's the only way that at this point in time, we've all prayed heavily for some kind of registry, but there's always questions about independent, reliable, trust, up-to-date data, how often is it refreshed? And like all these questions about the database start coming into play, because you're not required to report a change in trust structure or ownership or anything like that, then you just can't monitor it. It is a blind spot for almost all organizations. Excellent. Well, I want to go open now to some questions on the floor. So I'd welcome participants to drop some questions into the chat box. I will read the first one. And probably out to Ronald. Ronald, what's the best way for me to get funding to do something like this?
Okay. That's that goes back to the where do you start? Where do you start question. So look, depending on how complex or uncomplex your organization is, the first bit is quantify. You need some analysis done. It might just be, like I say, maybe you just need we'll call it a bit of seed funding to go away and do a bit of discovery work, right? But depending on time pressures, need, and other things like that, you want to qualify those anecdotal comments that everybody's made What are the symptoms you're seeing because of this? Just transaction monitoring, creating false alerts because of quality issues on data. We have issues around, name screening or other things like that. But fundamentally, you need to start this somewhere. It goes from anecdotal to qualifying that with some analysis. Now, don't go and overcook this bit to make analysis paralysis. You've got too much to make sense of. Firstly, simple things like, if you get your definition of customer right as an active, inactive, can you start with that? Who's transacting often? What's the rule on that? Do they transact 12 times a year, 6 times a year? Do they transact every week? You can quickly roll up those sort of calculations or queries to give you that view. Once you got that, you got a bit of a slice and dice, and now you've got the basis of saying, right, I think there is some red spots here that we need to work with. Normally, I've found some of those alone are enough to get activity happening. As soon as people realize, oh gosh, we've got some missing data. That sounds ridiculous as a statement, but it's very true. You may find that the data is incorrectly structured, has been amended, hasn't completely saved, or otherwise those formats and validations may not be in place. Maybe it's a pre-commencement customer or otherwise, but net result is just got to break it down and then pitch it on that level. That's where you start. When you find those red spots, they're a good basis to actually get some accelerated sort of help and support on the back of that. If you're going for a much more holistic view, then you do need to work for a process of breaking those and creating those segments, prioritizing that, and offering that up as a business case. And again, that doesn't need to take months and months. We've done activities where sort of within a week, you can sort of, depending on people who can understand the data and unpick it, and that skill, there's a week, 2 weeks, you can get to that point where you're starting to unpeel the onion and state, layers 1, 2, and 3 need to be looked at first because of these reasons. And now you have the basis of pitching this and taking this forward.
I'm going to
That's
digress.
where we.
Sorry.
No,
I just wanted to. You prompted me something I read a couple of weeks ago, Ronald, because this is what we're facing. Is obviously more and more re-verification projects are happening, or processes are happening. Our customers, organisations are sort of building this far more than we saw. Like, it's very much an upward curve. It's more important. We need to do this. And just a couple of weeks ago, I read an article in The Age where the author was complaining that he needed to be re-verified. And I'd never seen this in my life in the paper. And his whole attitude was, I've been banking with you for 18 years. Why do you need to re-verify me? And so I just wanted to throw that in, because we're sort of getting technical project here, but we certainly appreciate that the end result, going way, way back to our outreach questions, is some customers are not going to be happy, even if they feel safe, that they know it's the banker or the financial institution asking them, why on earth should I do it? Just
if I can sort of just add to that, it's a really good statement to make. So I have the good fortune of working across banking, maybe some superannuation, fintechs as well, financial service firms also. In that regard, if you have an ongoing relationship with someone, you are probably more trusting of being asked for more information. If you infrequently contact them and they turn up and say, we need some more data and we need to update X, Y, Z, you'll probably be probably more annoyed, or why I hardly talk with you guys. Why do I even need this? Much more prevalent in banking, where people are fraud, ID impersonation, all these horrible things that occur. And there's a genuine reason to actually update that and keep that. And I think as people understand, and if you start with that fraud angle and so forth as well, it's a very compelling case to actually convince someone this is important. It's out of control. You only have to quote some of the numbers that you see in Europe, and you've got an immediately good case for that. If you go into smaller institutions, and you maybe have like a BNPL or something like that, and you might when you ask for a KYC there, you're sort of like, oh, I've used you maybe once or twice. Do I really need to update that? And the argument about haven't touched in a long time, I see that as a red flag. You know, it just there, you will hope that if you're not using them for a long time, or maybe you are using them a long time, you know, has that up to date. The reality is that if you've changed your mortgage, we have. I was asked to KYC again, you know, so you may or may not remember the fact that you've actually been updated as you've taken further product on. So I wonder if the author actually fully considered that from an end-to-end view and whether that was true. Anyway.
It's a great segue to a question that says, what response rates do you get in an outreach process? Have in your experience, Ronald or Mark? We know the likelihood of them clicking on a link or whatever, but the question's been asked is what can we expect?
From what I've seen, and I need to be careful, I'm not too specific because one of our customers, Kim, might actually be listening to us on this call. But the starting point is these background data sources where you're trying to re-verify without outreach. So that could be 50, 60%. That could be up to 90%, depending on the data sources you use. And there are some complications in there without going deeply into it. If you use a credit header, there's some consent, and there's some, you basically need to advise the customer if they failed, if they didn't match on the credit header, that they suddenly get this email and they get frightened, and you might actually start creating calls to your call center. You can't really put the numbers on it because it depends. Okay, I'll give you the best case that I've seen where, let's say we went out to the outreach customers, the first attempt this doesn't happen in a day, it takes a couple of weeks. So if you imagine 100%, 50% verified in the first interaction. And that is where I talk about this. You tell the customer, this specific customer tells their customers in multiple different methods. The next time you log in, there's going to be this big message there saying you need to re-verify. And that seemed to be the most successful. But to that question, that was 50%. And then to get the next one, and I honestly can't remember what that percentage was, but the same approach. We sent out, we contacted you previously, we asked you to do this. It is a requirement we have to do. We're not doing it to irritate you, not those words, of course. And then that 50% went into, I can't remember the exact number, but that's where I keep coming back to that funnel.
Thank you. Well, it looks like we've run out of time for more questions, but I can see that there are some more questions that we haven't answered. If you've left your name, we will ensure that we will respond directly to those questions. So we're not leaving you in the lurch. We promise we'll answer them. So as a wrap up, I'd like to replay that we've learned about creating a re-verification program, how it ensures compliance, minimizing customer disruption, and overall cost effectiveness. We've talked about segmentation. We've talked about how to keep multiple stakeholders in touch with different parts of the business, and how do we manage the expectations. We've looked at things like background data sources, what does consent look like, and how to work with your compliance team to ensure success of a project like this. There are a lot of other parts to this, but we've had a sort of short set of time to look at something so complex. But I'd love to thank both Mark and Ronald for contributing to this discussion. We will be providing a comprehensive step-by-step guide in best practices. So we'll ensure that we'll share that with all the participants on this call. I'd love to say, everyone, have a fabulous day. I think the sun's out in Sydney. So thank you all for taking the time to listen to us.